Good morning. It's the 15th of December. We are Signal Centre talking ball. I'm Joe Neighbour, joined by a very happy Steve O'Hare. Good morning, Steve.
Yeah, I'm very happy actually. Thank you,
I know
Joe.
how long before you mention your win yesterday is what I was gonna.
I wasn't going to mention it. I'm
No.
very modest. I'm very modest in my approach.
Yeah, lovely.
So yeah, but yeah, I did really well.
You did.
You
You
throw
did
enough shit.
fantastic.
You throw enough shit at the wall. Some of it
Yep.
sticks, mate.
Yeah, it does
But
indeed.
it's amazing, really. My win rate has been poor. I haven't sort of like really nailed one. These gun-to-head challenges are particularly hard. I really think we should sort of change it to more of a investment type approach in the new year. Maybe we will come up with some new ideas around it. But it shows how difficult it is to just sort of like pick a trade idea with a gun to your head.
Yeah,
But if you do have a sound, can you say it's a sound risk management approach
I'd
or
say so.
a sort of
It's very consistent. We're always looking for more than 2-1, aren't we?
yeah, I suppose, yeah. But then the odds of this happening, if when you go for like yesterday, a 5-1 risk reward trade idea, um, the odds of it happening, it's a bit like, it's a bit of an outsider. It's a bit of like
Yeah.
a long shot. So, but they can happen. And yesterday was got a little bit of luck and it nailed it. So it sort of like makes my performance look a lot better than it feels like it's been.
Yeah. Right. Well, we'll come on to that in a moment. So let's just rattle through the latest news. So this morning we had some UK inflation data out, and that highlighted that the Bank of England are going to be in a bit of a tight spot tomorrow when they get together. They are expected to hold off now on increasing rates. It was, I think, at one point priced in, but we'll wait and see what happens with that. Boris Johnson's also suffered his biggest rebellion since becoming the UK Prime Minister, forcing him to rely on opposition votes to implement a key measure to stop the spread of Omicron COVID-19 variant. Almost 100 Tories opposed his plan to mandate the use of so-called COVID passes at nightclubs and other venues in England. He's not in a good spot, is he, at the minute?
No, he's not. But
A lot of it of his own doing.
exactly, yeah. I mean, yeah, just it's a bit of a shambles there, mate.
Yeah.
I think it's if you look at every government across the globe, it's a bit of a shambles.
Yeah.
The
Seems
people
that
are
way.
revolting.
They are absolutely revolting, aren't they? Oh, you didn't mean it like that. Okay, elsewhere, European natural gas has never been more expensive relative to US supplies amid spiraling old world energy crisis as winter descends across the northern hemisphere. European gas stockpiles are perilously low and may not have much chance to build as an early winter cold wave prompts residents to burn more fuel than usual. Again, that's not great. Looking at what's going on in cryptocurrencies, there was um, a bit of well weirdness going on really yesterday with the Coinbase exchange. I think we saw some astronomical gains on some tokens that sent users gushing about huge windfalls and wondering what happened. But I think it was down to a mispricing of a few instruments. It
Right.
looks like Coinbase is still investigating this issue. And no explanation has been given so far as to what went wrong. So just further, evidence that you've got to be careful with these cryptocurrencies. I want you to use on the wrong side of some of those.
Yeah.
There will
Yeah.
be, won't there?
Yeah. Of course. I saw an
Okay,
NFT yesterday or something. Can't remember.
missold for a wrong price or something. Is it the
Yeah.
monkey?
Yeah. 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 The board ape or something.
It was supposed to be sold for
Uh,
30,000. It was sold for 3,000. Is that right?
I think it was supposed to be sold for 300,000.
Oh,
And it
right.
was sold for 3,000. But if someone's paid 300,000 for that, God give me strength.
Yesterday, we saw the Chinese economy slow further. That was dragged down by worsening property market slumps than expected or anticipated. And there's also been disruptions from the repeated COVID outbreaks that we've seen. That isn't a good sign. If we're starting to see China slow down, that can be maybe a bit of a catalyst for what we're going to see in the rest of the world. And even when growth isn't great in China, it's still well above what we see pretty much anywhere else. So that is certainly an interesting story as well. In terms of what to expect today, it could be a bit of a waiting game ahead of the FOMC decision later. There's the decision at 7 o'clock p.m. That is UK time, and then there's a press conference at 7:30. No changes in rates expected, but markets are preparing for an increase in the pace of tapering, which may come as early as this month. So plenty to keep us on our toes with today. Let's get stuck into some charts. Steve, is there anything you particularly want to start with today?
Well, I'll start with the indices and see how that has played out over the last couple of days. If we're looking at Ftse, had a decent week last week and tailed off towards the end of the week, had a couple of negative days, and it's given back most of the gains as well. 5 negative days on the spin so far. Well, today's negatives at the moment. So under pressure around about the 7,200 level, which is, if we look back historically, it's a pretty pivotal level. So be interesting to see if we do get a break of this and a push lower, should open up quite a nice easy ride to the downside. The moving average convergence divergence crossing over, so that tells us that this move is pretty sharp against the longer term trend. On the DAX side of things, the Germany 40, similar sort of price action. We've been sold since the 8th of December, which was Wednesday last week, and negative price action has followed through and extended lower, where we've got yesterday's low down at 15,430-ish. Taking that out should end up sort of like sending us back into this congestion, or which takes us all the way down to just above the 15,000 level. So there's lots of support on the way down, and it won't be a straightforward ride, I don't think. CAC, similar sort of price action, 50-day moving average coming in as support around about the 6,885. The bearish outside candle from Monday's price action on the Dow has been confirmed, and we have seen prices move below last Thursday's low, 35,580. This didn't have the sell-off that we saw in the Nasdaq, which I managed to jump on yesterday. Obviously, Joe's already mentioned that. I wasn't going to mention it, but we did sort of poke our head through the 50-day moving average, got all the way down to 15,738, and as we headed towards the close, closed a bit higher than that. And trading around about closing levels from last night. So decision time as to whether we're going to get some follow through today. This candle from yesterday almost looks a bit like a bullish hammer. So maybe that's telling us we are rejecting the downside ever so slightly. S&P's still seems to be trading not very far away from its all-time high. We're about 100 points away from that, which isn't an awful lot in terms of S&P price action. If you look at the normally, well, the recent ranges, we've had a 80 to 100 tick range in a day. So there's no reason that we can't sort of recover from here. We didn't quite get down below the 50-day moving average, which is acted as somewhat of a support over recent times. Aussie 200 posting lower highs and moving lower, and has recovered slightly overnight, but we've got 7,300 acting as support here. A break of there should open up the downside, and a rally's been sold into. China 50 shows quite a decent reversal. This shooting star candle and shooting star formation, this doji, if you fuse these candles together, gives a really nice evening doji star formation. And that looks like it's got potential for further negativity. 50-day moving average coming in at least 250 points lower than we're currently trading. Actually, 350 points lower than we're currently trading at 16,100. That's down at 15,750. The Hang Seng under a bit more pressure in compared to the China 50. So China 50 outperforming there, but obviously the news is not great that things are slowing down. And if we look back historically, we can go all the way back to September, and we're approaching levels that we haven't seen since September in the Hang Seng, and we've had this nice head and shoulders formation, which is projected lower and trading well under the 50-day moving average there. The Nikkei, bit mid-range really, coming up to or approaching this 28,300 level. We can see that's acted as support, been quite pivotal, acted as support and resistance on a number of occasions. So once again, being retested this morning, and it's reacting higher from there. So looks pretty positive initially. Oil, I'm going to do a video on oil this morning, shortly after this we finish the show. That'll be posted on YouTube. And we have seen a correction from the start of December, but this has been capped by sellers coming in around about the $73 mark in WTI crude oil. Negative price action since then. We've got resistance above. After an impulsive move higher, we normally get an ABC correction lower. Looks like we've had the A leg. Potentially, this is the B leg correction. Looks to have stalled, but there is still potential for it to retest the 74.70 to 76.35. So there's about a $1.50 range there, which would take us up to the 61.8% fib. So that's would be quite a nice retracement level. We seem to have stalled around this 38.2% fib, which again isn't a bad one. But normally what you'd get is you'd get a nice clean A B correction that before the C leg happens. It doesn't feel like we've had that B leg correction yet. Similar sort of price action in Brent crude oil. Prices have topped out around about $76.50, and we're back retracement of the move down. So still under pressure on the crude oil side of things. Still a bit to play out really on the long-term side of things. It still feels oil is moving higher over the medium to long term, but we are just going through a natural correction of this process. Upward trending support line being tested in gold. This will really be based on the dollar strength, whether the dollar strength can continue. Joe will show us the triangle formation that he's been talking about this week. And but yeah, it does feel pressured ever so slightly on the gold and the silver side of things. These precious metals obviously very important, but silver won't be helped by this slowdown in China either. It's one of those commodities that they use a hell of a lot over there. So copper also being impacted possibly by this slowdown news, and breaking back below prices we haven't seen since early October. 418 trading at the moment, and a break of here opened up potential for retest of the levels around about $3.85 to $4 level in copper. We didn't do natural gas. Natural gas has broken lower from the 6th of December week, and price action has filled the gap on a weekly basis up to $4.03, and then projected lower again. So there is potential. Joe, this is what was your gun to the head trade for yesterday, and I think, and doesn't seem to have sort of like had the move that maybe you were hoping for yesterday, but still looks like there is potential for that move lower.
Yeah, maybe.
Cryptos, just finishing off with cryptos. Bitcoin seems to be just tracking sideways in some sort of like range bound, 52,000 down to 46,000. Really a break of either side. We should see support coming in around about the 42,500 level, and also the 40,000 level, and above, resistance coming in at that 52,750 all the way up to 56.5, 57,000. Just range bound at the moment. No real direction that we could see on the Bitcoin itself. Ethereum in a similar downward channel. Ripple also having that downward channel move. Cardano holding on to this long-term support that we see from 4 or 5 different points, so it's a solid support, but it does feel like it's got potential for a break, a real rejection over the last few days in an attempt to recapture ground away from this 120 area, but definitely opening up a break of here could sort of like threaten to break the $1 level quite soon.
Fantastic roundup, Steve. Thank you very, very much. Let's have a quick look at FX. So, as Steve mentioned, we were talking about this triangle pattern that's forming, or this pennant on the dollar index chart. And yesterday, we saw a decent close above that resistance that I'd highlighted at 96.42 to close outside of the pennant pattern. We've got a bit of weakness today. We're down by 0.13%, and we've obviously got some massive macro events due out today, particularly from the FOMC. Which could change this picture very quickly. But from a technical and a purely technical point of view, that for me is a breakout, and we could be looking for higher prices over the short to medium term. Still got targets on the upside at 97.72, which is that red line above the price, as you can see here, which is the 61.8% Fibonacci retracement level from these highs that we posted back in March 2020 down to these lows that we posted in January earlier this year. So for me, looks like it's going to keep heading higher, but it also is worth pointing out that we've got these macro events later today. So although technically it looks good, we do need to be aware of the news and what impact that could have on price action between now and 7:30 or 7 o'clock this evening. So on the flip side of that, we're looking for something similar on Euro US dollar. We've got a pennant kind of pattern forming here as well. We haven't really seen a clean break on that one, so not quite mimicking what we're seeing on the dollar index, but we did see a big rejection yesterday. We did post highs above the previous day's candle, but then actually closed on the low. So that is a bit of a rejection. We've got a bit of green showing today, very similar to the dollar index, up by 0.13%, but looks pretty ominous, I think, and overall still looking for lower prices here. If we get that confirmed break, then we're looking for a move down to that 110.58 level, which is the measured move of this head and shoulders top pattern. Which is for me a reasonable area to maybe consider exiting shorts if you've been short of Euro US dollar, or maybe even thinking about some really speculative long positions. Looking at cable, that continues to hold this 38.2% fib level, which, as you can see, did a fantastic job there. We saw some speculative money come in, I guess, and push that higher. And we look as though we're trying to take out this high from the 10th of December. So that could potentially lead to a corrective move up to around this level here, which is at 133.53. And then above that, we've got a level at 134.15. Ultimately, we're still in a downtrend, so I don't expect there to be any kind of massive move to the upside or reversal in the underlying trend. But we could potentially get an opportunity to sell into the strength, and that obviously would mean further dollar strength as well if we see more downside. So still fancy lower prices here, but that 38.2% fib level is doing a reasonable job. If we look at euro sterling, that continues to trade in this bearish channel, continues to be rejected from this 85.95, and prices are heading lower. Pretty much now 5 consecutive days of losses on that, ahead of the Bank of England and ECB tomorrow. So that will be quite interesting to see what happens. Let's take a look at some of the riskier assets. Aussie US dollar continues to stall at this 71.70 level, which we highlighted yesterday, this previous swing low from the 1st of October, which didn't really do a job as support, but now appears to be doing a bit of a job as a resistance zone. So still looking for lower prices there. Still got this head and shoulders top pattern that's kind of looming over the price action, and we are looking for lower prices. Next support is down at 69.93, which was these previous lows from the 3rd of December. If that gets taken out, then maybe we've actually formed an even larger top pattern on the daily chart here. I mean, you could even argue that just looking at this fresh eyes now, that is actually the neckline of an even larger top pattern there. That being the left shoulder, that being the head, and then we've got a right shoulder here. So looking at that from a technical perspective, we've broken down and we're actually seeing a really nice retest of that level, which could then suggest that we're going to see much lower prices. And if we look at that from a measured move perspective and what we could potentially expect, we'd be looking for targets down here, which is at 62.64. I wonder, Steve, if by magic that will also be a fib level. Let's go and have a look, shall we? No, not quite. It's in between the 61 and the 78.6. So yeah, quite interesting. I
Yeah, like that.
didn't see that before until today, which can happen. But maybe I'll have a rethink on that chart and redraw my analysis. But yeah, that's quite interesting.
Yeah,
That,
like that a lot. It feels like that. That's the way it's going. Aussie definitely feels pressured on a long-term basis, and we've had this short-term aggressive sell-off to the downside, a little bit of a recovery, and maybe the longer-term time frame will take over with a break of that level. I would like to see the break before.
well, I mean, maybe we've
Um,
seen the break there. If that was the neckline there,
yeah,
and we got
I
the
always like to
retest
see
here,
it
the
a break,
horizontal break.
yeah, horizontal break of that left shoulder. For me, that sort of like is the real confirmation. So,
Yeah.
yeah, but I like that one.
But we've
I
got
like it.
38.2%. That's another level that I missed there actually. So just by drawing those fib levels on from the low in March to the highs
Yeah,
in February, we've got that yellow line there, that 38.2% level, which I was wondering why we got this sort of sharp reaction down here.
yeah,
And maybe it was to do with certainly that level there from the 2nd of November, but also the presence of that 38.2% level, which
yeah,
looks like it might have done a bit of a job. So
yeah.
yeah.
Nice one.
Okay, let's leave it there for the FX roundup then and move on to the gun to the head trades from yesterday. And finally, we've got something to really get excited about. Steve absolutely nailed a NASDAQ short yesterday, making 5R. So many congratulations, Steve. That, puts a big old bump up in the overall P&L. As you can see, quite a big uptick there.
Nice.
Just on the back of one successful trade, and there's your personal P&L chart, which is still trading in a very nice uptrend. So, hoping this is going to kickstart a little streak from you.
Yeah, I mean,
You're feeling in tune with the markets.
based on my win rate, I would say no, but
Yeah,
based on yesterday's performance, maybe I can pull out a little bit of lucky magic, I'll call it.
yeah.
So the one,
Just
the
before you
one,
go on to your trade, Steve, I mean, I know you touched on it earlier, but this is just sort of further highlighting the idea of these win rates that we've got. We've both, traded roughly around about the same amount of ideas. The win rates aren't particularly impressive if you're looking at this, on a standalone basis, but we are still making some pretty solid returns because we always make sure that our risk rewards are better than 2 to 1, and that's a rule that we've had since day one. And means we cut out of our losers pretty quickly, but we give our trades the opportunity to run onto these, 4, 5, 6 R winners, and
mm,
that's keeping us, the right side of the profit and loss line at the minute.
yeah, obviously it's sort of this doesn't incur costs either, but
So the only
I
cost that we'd
suppose
have are dealing costs, which we wouldn't really take any swaps into consideration because we don't hold these
overnight,
positions
no.
overnight.
Mm, yeah. And that they can add up as well. So yeah,
Absolutely.
definitely something to consider. Um, so the one trade I'm looking at, and I might be stealing your thunder a little bit, but there's a quite a this natural gas um, got a little bit of a inverse head and shoulders formation here. However, we aren't. Can we say that we've actually broken above it? It seems to be above it. So inverse head and shoulders formation. But at the same time, I've sort of like if we take a horizontal line, so this is the horizontal line, there's the resistance. I would prefer to see a break of 380 to sort of like then initiate along for a bit of a recovery. However, we haven't quite broken that 380 and we seem to have stalled after breaking the neckline. So is this an opportunity to go with the recent sell-off? So you can have you stop quite tight. You can have you stop at 382. You're getting short at 377, and then you can be targeting just a sort of like a move down to here. So that's the one potential. The other potential would be to buy a break of here, but gun to head challenge, I've got to act. So I'm going to go with Joe's continuation in the potential for the downside on natural gas although it's going against this inverse head and shoulders formation. But again, I don't really feel like I'd get confirmation of that until we got a break of 33.81. So until that time, then this is a good risk reward trade. It's only a 4-point risk, and let's try and get it to a whole 5 points. 5-to-1 risk reward. There we go. 5-to-1 risk reward would be looking for a move down to 352. That would be sort of in line with what Joe was looking at yesterday. So that's what I'm going to go for today. I'm going to nick Joe's idea from yesterday, getting short at 377, stop at 382, targeting 352.
Okay, well, if we're stealing ideas, I'm going to go shorting the Nasdaq.
Go for it.
So this is the daily chart. Clearly, it's in a very strong uptrend, but we potentially are trying to form some sort of short-term top. We did post some kilos the other day. When was that? The 3rd of December. So there is potential, I think, for maybe a retest of these lows. So that's what I'm going to look at on an intraday basis. What attracted me on the intraday charts is that we've seen a close over the last, well, we're looking as though we're going to close below the 10-period moving average after a brief rally. Then, as you can see, lots of stalling candles here, and then just a roll over to the downside. So I'm going to sell it at 15,891. Really tight stop above all of this sort of cluster of price action over the last few hours at 15,987, and I'm just going to target a move back to these lows from the 3rd of December. Which is at 15,540, looking for 3.66R on that today. I think the challenge for us, Steve, is going to be staying in these trades up to the FOMC later today. But if we can manage it, then there's a chance, as there always is for these things. So that's my trade of the day.
Nice one.
Okay, so we've talked about it a fair amount already, but it is going to be front and center of all traders' minds today, I would have thought, and they'll be trying to prepare for what happens later at 7 p.m. UK time. We have the Federal Reserve rate decision. No change expected in rates, but markets are preparing for that increase in the pace of tapering, which may come as early as this month. The press conference is at 7:30. Prior to that, we do have some US retail sales numbers and also the Empire State Manufacturing Index number. They both come out at 1:30 this afternoon UK time, and then we also have at 3:30 the weekly US EIA crude inventories number. Previous week saw stockpiles fall by 240,000 barrels, so plenty to keep us interested today. This really is only the start as well, because we do have the Bank of England and the ECB, I believe, tomorrow. So yeah, could be a pretty volatile couple of days in markets.
Nice one.
Anything to add, Steve, before we wrap it up for the day?
No, just be careful out there.
Do indeed be careful. Okay, have a great day, everyone. We'll be back tomorrow.
Cheers, mate. Bye.
Bye-bye.